Okay, folks, welcome to the week ahead commentary. This is where we review the closing price action of the major averages and we talk about the strategy for the new trading week. Now, I'll put together best stock charts similar to what I did last week. There'll be the freemium version, then there's going to be the premium version for members that'll be posted in the members area. So this week, I began to talk about this on the call, and I was talking off the top of my head, but I really don't have much to change about it, and that's in terms of the bond market relative to the stock market. Stock market's been pressing up higher, bond market's been moving lower, and when the bond market moves lower, guess what? Yields are moving up higher. We have a PE ratio of roughly 33 and a half, and that's expensive. And on a forward-looking basis, we're pretty expensive as well. So I'm going to begin the commentary out tonight by saying this market's vulnerable to a sell-off, especially if yields press up higher. Now, a March rate hike is now only 10.5%, May 35.7%. This is the kicker. June, which was a foregone conclusion, this actually improved from where it was this morning. This was down in the 60s, popped back up to 74. This was in the 80s at one time, 100% probability. So you see the trend here. The expectations are declining where the equity market is at all-time record highs. That is a problem because the reason why the equity markets are pressing up higher is expectations of a rate cut. Now, looking at the 10-year yield weekly time frame, this is actually off the highs of the day, but we were threatening earlier in the day to break out above that upper band of resistance here. If that happens, folks, and we do a retest the following week, that puts into sight the highs last seen back in October of 23. And that's not going to bode well for the equity markets, and in particular, the high beta stocks, high volatility stocks. So let's watch this very, very carefully. A lot of people talk about the stock market. It's a market of stocks, and this is what we focus on. No. We focus on the bond market because the bond market is the tail that wags the stock market dog. The bond market is vastly larger than the stock market. As goes the bond market, so goes the equity market. And you can see TLT this week broke down below support on volume, no less. That's the second consecutive week of distribution. Tips. They rallied off the lows of the week. I want to take a look at the daily chart because this was looking promising last night on a relative basis versus the S&P 500. You can see we popped up today, but relative to the S&P 500 ratio, and we popped up today relative to the S&P 500. Now, there's no breakout here. This is not actionable whatsoever, but it's something to keep an eye on. No breakout. And we draw our trend lines, upper band of resistance, lower band of support. Same deal here as we would do if it weren't a ratio chart. The dollar. Now, the dollar up week, but not a great week. We closed well off the highs, and last week was a filled candlestick. So this is a sign of topping action at resistance. So actually what we need to do here now is take our crayon out and say, okay, if this, then that. First off, let's clear. Okay. Now, that's better. Here's what we're looking at. Do we break out or do we break down? That's the question. Now, if we break down, you look to gold, silver, mining stocks, materials, energy. If we break out, look out below. Look out below because there's not a lot that's going to go up. Maybe the industrial average will go up. Transports, because they're exporters, meaning the Dow Jones industrials are transporters, the railroads to bring their goods to the ports. High-tech beta, no bueno. Euro closed strong. I think this rallies. But to be fair, I said that last week. Yen holding the lower band of support, bounced off the lows, still a toxic chart. Volatility, an up week, but we closed well off the highs of the week. No breakout. Not much to talk about here except for RSI, higher lows. Stokes broke out. They broke out. Daily chart, still putting in lower highs. We broke out today above one pivot point. RSI possibly hooking up here. Jury's out. Jury's out. But I would have to say, if anything, this is more bullish than bearish. If I had to put my nickel down and make the call. Dow Transports, outside reversal bar, bearish key engulfing, call it what you want. Bad, bad, bad. We broke that back down below support. RSI rolling over. This is a leading indicator. We were down on volume. Possible double top on Stokes. MACD, lower high. May go negative, maybe not next week, but the following week. Not good. Daily chart. Wow, bad day. So now we have a trend. We have a couple of data points. We can take our crayon out, and we do this. And then we do this. Here's our new, believe it or not, short-term downtrend channel on the Dow Transports. We broke down an RSI. Down volume was light today. Stokes down below 50. We know that rallies tend to fade. Dow Jones Industrial Average. It rallied off the lows of the week, but net closed down. Couldn't go positive. Down only spot 1% daily view. I don't like it. I think we've stalled out. I think momentum is faded. RSI, lower highs and lower lows. I think we're going to break. The question is, do we see enough downside to go getting short? I don't know. I don't know yet. I think we need more data. We're data dependent, as the Federal Reserve would say. We are data dependent. You know, I'll use an example, SMCI for a moment. And SMCI was at all-time record highs, thinly traded stock. And I haven't seen an RSI on a stock like that since GameStop, and before that, National Beverage back in 2017. I never shorted GameStop, but I did short National Beverage, and it was a similar challenge to what SMCI was, but actually worse in a way, because it was a very tightly held company. And the lessons I learned from that stock, I didn't have when I was trading National Beverage. National Beverage, I was buying puts, selling the common, no hedge. Now I sold credit spreads. Time was on our side, unlike option buyers. And I briefly sold a very small lot of, one lot, 100 shares of the common stock. And I knew immediately that I was wrong. And it just pressed up higher. So we converted that into another tranche of credit spreads, which we booked profits on today. So when you're at all-time highs, getting back to, I forgot what I was even going to, all-time highs, clear blue skies. National Beverage back in 17, GameStop back in 21, SMCI today, and frankly, we're only a couple of percentage points off of all-time highs with the Dow Jones Industrial Average. Heck, we hit all-time highs this week. Do we just go shorting nilly-willy? No. No, we need more data. S&P 500. Very similar chart as to the Dow Jones Industrial Average. The trend is still up. Yes, we closed down. 1 week does not a trend make. Daily view. Very similar chart here. Really, really tightly correlated with the Dow Jones Industrial Average. So same deal. Lower highs on RSI. And we're not ready to short here. Trip Qs. Weekly chart down nearly 1.5%. And we were talking about this earlier in the week that the mid caps and small caps were beginning to outperform the Qs. And what I really didn't elaborate on all too much, and it was in the back of my mind, but I'm going to verbalize it now about the mid caps and especially the small caps daily chart, is that the small and mid cap stocks do not behave well in a rising interest rate environment. It really impacts, those borrowing costs really drop to the bottom line, impacting EPS. So the fact that yields are pressing up higher along with small and mid caps is a bit suspect. Technology stalled out this week, very close to a bearish engulfing week. Volume is about average, nothing horrific. Daily chart, not good here, lower high, but we haven't broken support. We did break this ascending wedge formation. We can't rule that out. That is a break of some sort. Lower highs in RSI. Ultimate oscillator not looking good here at all. You know, these bearish divergences have been building for the past couple of weeks. Semis closed down a percentage point. They lost their luster. Volume very heavy. Daily chart. Bearish key reversal on the day today. No bueno. I'd be a call seller here. I would short it in that way. You know, that's a strategy that could be employed right now. Deep out of the money call spread. If we're wrong, heck, all we do is sell a put spread, balance it out, then you have an iron condor. LABU. Weekly chart. I'm loving this chart. I love this chart. I just hope the market holds together. We have an inverted head and shoulders setup. Left shoulder, head, right shoulder. Breakout above, let's call it 143 per share. I want to add more next week. I was thinking about it this afternoon, but I'll be honest with you. As recently as last night live, I was fried with that. I keep bringing it up, and I apologize for self-obsessing on this. But the SMCI trade drained the heck out of me this week. And last night I was just a shell of myself. All I wanted to do is get back to studying the charts and thinking about what I'm missing here. So anyway, I did not want to add to the position ahead of a 3-day weekend. I wanted to think clearly Monday morning, and perhaps we'll act on Tuesday by adding more volume, very heavy. Let's go to a daily view here. Loving this setup. Look at the higher lows, and let's take a look at it on a relative basis versus S&P 500, and it's outperforming. Second consecutive week. What's not to like about that? No breakout, though, to be fair. Staples, Doji Star formation. This could continue up higher. Discretionary names. A bunch of nothing here. Not much to talk about. Retail sales came in poor this week. I would avoid this. I just don't like the retail space. And what they're calling now, a couple of buddies of mine, they're calling, because I always bring up buy now, pay later. And they go, no, you amateur. These guys are Wall Streeters. It's buy now, pay never. So I started cracking up. So it's buy now, pay never. Emerging markets. I'm liking this. I got to say, if the dollar breaks, these are going up higher. Under accumulation. Nothing not to like here. Daily chart. Doji Star formation. I think this gets resolved up. On a dollar break. Energy broke out this week. And you can bet your bottom dollar. Oil did too. RSI rising. Now, we're not thinking about this week's CPI or PPI. I'm thinking about next month's CPI now. And energy is moving up higher. Let's take a look at, well, first let's go to a daily chart of energy, and then we'll go to oil. Energy was technically down today. We're probably going to do a retest of 85. I'd be a buyer here. I think this is breaking out higher. I think we're going to see more sector rotation. Oil, up nearly a percentage point on the week, and we closed back above the 50-day moving average. I think we did that 50-week moving average. I think we did that last week. We did a retest this week, daily chart. Bullish key reversal bar, oil going up. Gasoline prices held that 19% gain last week, gave back a fraction of it this week, going up. Gold down over a percentage point on the week, consolidating nicely. Daily chart looks like we have some support here. Question is, do we hold it? And it's all about the dollar. What does the dollar do? It's that simple. Gold mining stocks, GDXJ weekly view, bounced off the lower band of support. We're still basing here. I don't see a reason to go jumping in and buying more. Daily view. They were higher in the day, and they closed higher, but they faded yesterday and today. And I'm saying they because I'm looking at two candlesticks here and including them as one. So Thursday, Friday, up days, topping action. I think we pull back and do a retest of recent lows. Nugget, weekly view, very similar chart. We're still down below weekly support. Daily view. We technically closed back above support. We need to see a retest. I like the Stokes. They're looking good. Silver, that closed up, wow, nearly 7%, 6.75%. Looks like it may want to break out here. Silver's been outperforming gold lately by a mile. Daily chart, look at this flying out of the gate here. Wow, silver looking good. Silver miners, weekly view, they're down trading with the gold miners. There's no sense in spending too much time there. Gold money, we don't look at this all too often. Attempting a breakout. Stokes breaking out though. Price not. RSI breaking out. Boyle, I know that Talon made some money here. Congrats, Talon. It's basing. We closed out the day at 1431. Let's go to a daily view. Good day. Good volume. I think we're going to rally. I want to give this a little bit more room to develop, though. All right, Netflix, we are out of. We got out of that strangle. We spent enough time in it. We move on. We raise capital. Meta, that closed down today. Let's leave it off with Supermicro, weekly chart. So tried and true manual trend lines, they still work. This is what I picked up after hours last night after I ended the live stream. And it allowed me to sleep last night. So we saw the spike up this morning. They manipulated the stock up higher. PPI came out. They even opened it up higher, but then it succumbed to the selling pressure. RSI still very overbought here, 89.95. Daily chart, crushed. Down 20% in a day, and it had it coming. Son of a gun. Look at the volume. Massive, massive volume. Let's go to the 4-hour chart, see what that looks like. It's still overbought. On a weekly RSI, daily ADX is still around 70, 4-hour chart. I think we're going to bounce here. Probably open down. We'll get a little bit of a bounce. Look at this. ADX is still above 70. Last look after hours, I was hoping they would close it down below 800. At last look, it was down below that mark. Maybe back above now. No, it's back down below. Good. I don't want to look at it anymore. Down below 800. Last visual of that stock for the weekend. Hey, folks, I will talk to you on Monday Night Futures Live. Enjoy the weekend. I will chat with you in the chat room over the weekend. Till then, be well.